It's 3 p.m. on the 21st of October. We are live. My name is Chris Pulver. Nice to be with all of you today. Market's a little bit on the mixed side. We have a slight pullback on the indexes today. S&P is down about 0.37%. Nasdaq just under flat, 0.12 on the Nasdaq. Dow is down a hefty amount, as is the Russell. So the Dow down 0.84%, Russell down 1.56. Yikes. Russell having a pretty nasty day out there. So let me see if something changed today on the watch tool. I don't think that it did, but let's find out. We had about a 3% shift in probability for the Fed meeting on the 7th, which is, of course, during election week as well as non-farm payroll week. The argument right now is that the Fed didn't need to take a jumbo cut in September. Of course, it's easy to, poke at the Fed and mock them, but I think it's funny how the market forgets how the summer jobs reports and the employment news and the inflation data was suggesting that inflation was going much lower and trending lower while jobs were really struggling and softening. So, I saw the argument both ways where there was an absence of data through most of September into October. And I thought there's no Fed meeting in October. And the Fed kind of just took the 50 basis points cut, put it out there. I don't know if they need to cut another 25 and 25 by the end of the year, but they probably will. Based on these percentages, I don't see this really shifting aggressively to be like, oh my gosh, we're 50-50 going into the election. The Fed's probably going to cut 25 basis points. And if they do, fine. The market's kind of pricing a lot of things. We're expecting to see cut in November, cut in December, cut in January, and then a pause through March. And during that window, we're really going to see what the economy can do. We're going to see what the labor market looks like. Inflation data shows, and we're going to see what the Fed ultimately decides to do. I think also in that window, we get through the election. We still continue to see inflation data come in. How much hotter can inflation data come in? It came in hotter in October. For the September prints, CPI was up. PPI was up. And is that a problem? Does the Fed need to not cut rates? I don't know. But the bond market's doing one thing. We've had all-time highs several times the last couple of weeks on the S&P and the Dow. We have not seen all-time highs yet since the July top on the Nasdaq. But we'll see what these are made of. So a little bit more volatility on the small caps today. Dow also with the pretty nasty candle on the day, down about 0.85%. Let me take a look at my moving averages here, 50, 100, and 200. If the Dow pulls back into this window, this is going to be something I just spot check. If we pull back into this 50 period, I'm likely going to take a stab at some credit spreads or even debit spreads. That's fine too. So if we're down, let's say 3 to 4%, I would gladly take a pullback on the DIA. If the Russell has to pull back a little bit deeper than that, I'd like to see the Russell maybe getting back into 215 or 213 and look to see, pullback wise from these recent highs. Can we pull back, let's say around 5%, maybe 5 to 6% on the small caps before I start taking additional trades? VIX is up around 3.72% today. Nothing too crazy. Dollar index, another surging day on the dollar. This is why I said don't call the top, even though this was a nice resistance zone. It's not showing it yet. So I am not shorting the dollar. I hope we have traders out there that have been paying attention. The DXY has been somewhat challenging this year outside of the pretty straightforward plummet, although not every currency pair reflected that. And then what was pretty simple to see was the bear trap potential at the bottom and this thing squeezing. The problem with this is we didn't get a pullback. If you're looking on the higher time frames to get this trade, you've got price breaking up here. Okay. Let's see if it breaks and pulls back. It didn't pull back. It just broke and paused, broke and paused, broke and paused. The best thing you're going to see on your smaller time frame charts would be bull flags. And bull flag traders probably did okay on the dollar index. I don't know if this is still lots of resistance up here. If we start to turn, there's still a chance the dollar gets weaker. If we don't turn, then I'd be looking up around this 105 to 106 area to see if this becomes resistance, and then the dollar starts to turn back south. So basically, if the price shows it, I'm looking at selling the dollar. Price doesn't show it yet, therefore I'm not calling the top on the dollar. Oil, still quite volatile. I have 0 positions in oil right now. I got out of my CL positions. I'm out of USO. I'm not playing the game of, who's going to win, Saudi Arabia or, the world. I don't know. We could be looking at, if oil breaks below, this is probably the best thing for inflation, which I'm sure a lot of the world wants to see right now. If oil breaks below, that's good for inflation to continue to trend lower as, energy prices have been sticky. Food and energy prices have been sticky. That's why they have core. So it excludes that stuff. But if we have the support levels holding and oil keeps, poking and poking and poking, I mean, to me, that looks like it's a crowded area off support that can go either way. But what typically gets us there, this is my one concern. If we have this floor, okay, and we have this lower high, to me, that is we sold and now we're making lower highs, or I'm sorry, equal lows and lower highs, right? That would be a descending wedge. And I'd almost look to see if the market actually breaks to the downside to follow through. Because if the bears got us there, the bears are likely going to continue to put pressure on that floor. And if that floor breaks, then we got measure moves and things to the downside. So I'm not interested in calling the bottoms here on oil. So I won't. CL, same thing. I'm just staying out of it for right now. Natural gas, I'm way more interested in natural gas. I do want to put in a couple of trades. I think I actually issued some trades last week on natural gas. I think I put it into my Pulver alert section. So nat gas, did I place trades or they not? Fudge. No, I think I was actually waiting to see. Okay, so here's what I was doing. If NG came down to tag one of these alerts, what I was going to do was go out to May of next year and just put in a credit spread or a debit spread, depends on what the cost is on NG. So I don't want the risk of assignment, but I want to see if price will come down and get to a spot that I'm pretty interested in trading at. Very nice, Francois, killing it. Daily profit play, 22.5% today. Nice, man. Yeah, I think mine was like 18.75. Little gain today on the SPX. I'll take that. And then, a decent little directional move back into neutral. So it's been, I mean, you probably had a chance to take the trade again around noon today, from noon to 2. Another good spot for the daily profit play. That was pretty calm conditions. But NG, I'm just waiting for a chart alarm there. Let's go back to gold. Gold hit all-time highs. It's been a nice little rip here the last couple of weeks since the early part of October. Here is the bottom October 9th. Starts to go back up on the 10th. We hit all-time highs. We're stalling to pull back a little bit today. Silver was up for the morning and also faded, but silver looks pretty darn good to get us back into these 35.80 levels or $36 a round number. I'd love to see if silver has more available, and it's not just, I mean, this is like perfect symmetry here. So if we go low to high, higher low to higher high, I'm measuring symmetry out to 35.88. If we are just going to be sitting in a move that goes higher than that, I'm still comfortable taking profit around that zone and then looking to see if we have a brief wave 4. So maybe this is a wave 4, maybe this is a wave 4, and then scoop up some more and see if this wants to go up for a fifth wave completion around $48. So silver still one of my bigger positions that I'm in, and one of my bigger technical levels that I'm wanting to be bullish on. So silver futures, same thing. Oh, that's what I need. I need to do silver futures. So SI took this trade last week. It's pending. It's not filled yet. I'm going to look to see if I can get filled at 10 cents credit. Yeah, so I was issuing a credit spread as well as a debit spread on SI, and that's a contract out to January of 2025. And I'm looking to see if we can push up a little bit more. So all I want to see on SI is a bit of a pullback and rebalance from that little breakout candle we saw last week, where silver had a big surge on the 18th of November or October. And so if we pull back into this area or this area, I'm looking to see if we just kind of find some efficiency, accumulate a little bit, and then continue to head higher in that trend. My measure move would be around $35.40 on SI. Okay, Bitcoin. Get rid of some of my doodles here. Bitcoin is trading at 67,464. Bitcoin is pushing and knocking on the door of another potential breakout. We do have all-time highs around 73.88, 73.882. Great. I hope that we can start drifting higher. It's interesting to see that the dollar's getting stronger and Bitcoin's pulling back. That's a typical correlation that we do see. So if the dollar ends up getting stronger, I wonder if this pulls Bitcoin back into around 60K. I still like Bitcoin from 60K. I really like Bitcoin from 52 or 51. And longer term, I'm looking to see if and when we can break the highs. Can we have a measure move up into 107, 108,000? So I still like Bitcoin. I'm still in Bitcoin. I'm waiting to see if we are just going to keep, pestering this resistance zone. And eventually, if we break and pause, that we end up making a run back to this, and then we're looking for any type of like pullbacks to continue to run. That's my measure move on Bitcoin up to 105 or 106,000. But I'm watching this price action very carefully because if we're not convincingly breaking higher, this could definitely come back in and retest, or come back in and retest. So I'm watching this closely, but if we break and we have a lot of momentum, there's probably plenty of flow to push this thing higher. Speculation, momentum, all these things, kind of kick in. This would be a huge milestone. If Bitcoin cracks 100K, that's a big win for the crypto. And I mean, look, it's already had a lot of wins by staying alive, not going to zero, and making all-time highs, outperforming the indexes and outperforming essentially everything. So you just wonder, can it keep doing it? Okay. BITO, I've got some option trades here. I'm long on basically a leap call. And I'm also got some naked puts out there to own some shares at 16 and 15. IBIT, let me check these really quickly. I saw we're getting additional approvals. So BITO, I know I can trade options on. If I go to IBIT, I don't know if this one was approved or not. Not yet. So there's still no shares or options chains on IBIT. FBTC is the Fidelity Bitcoin ETF. Still no options on that one. So I'm pretty sure they have to clear with the CFTC and clear with the OCC in order for us to have options to trade. But if and when we do, I will be actively trading some options around the core positions that I have, because I do own IBIT, BITO, FBTC. I've got some dollar cost average positions in all of those. I also have MicroStrategy, which is another one. So if anybody's interested in kind of antsy to trade options along the Bitcoin correlation, then you can trade BITO, but it doesn't price out the same way as just spot price Bitcoin. Or if you can trade Coinbase, or you can trade MicroStrategy. They're not perfect, but IBIT is pretty perfect. I mean, this one looks almost identical to Bitcoin price as far as structure. The only problem is I can't trade options. So, but I like it. So keep an eye on that one. We'll talk about that more in these coming sessions. MicroStrategy, pretty impressive run again. I don't really know how or why this thing is making all-time highs without Bitcoin being a part of it, but it is what it is. So maintain a buy by BTIG, Wall Street bets stock, mostly higher pre-market, Clover Health Investments, time to invest in software stock. Okay, so that's not very helpful. We have earnings on MicroStrategy next week, which will be interesting. This one's going to be pretty volatile. I have a lot of income trades all the way down here. I'd almost like to see it. I mean, not to crap on the stock, but I'd like to almost see it pull back to offer a chance to scoop up some higher volatility, sell some premium, generate some more income trades, as opposed to just buying this thing at all-time highs and watching it rip. Okay, any thoughts on Tesla earnings? Yep, we have Tesla this week. So let me show a screenshot of what's going on this week. Tesla's trading at 217.93. I do have a credit spread that will be a part of the earnings play. I'm out to November 15th here. You can see my trade 225 sell put by 220 buy put. It's a bull put spread. I collected 270 of income on the trade, and where we're at right now, it's like if earnings is solid, then I think it's pretty straightforward. Like, this is a gap, and we could certainly gap fill all the way back to like 238 or 240. So a positive earnings push on Tesla gets us back into 240. Now, at the same token, I'd almost like to see this, because we have this gap right here that's moved away on that kind of negative robotaxi news, whatever it was. I think it was robotaxi. If we push lower on a negative earnings report, Tesla's volatile enough. It gets hit pretty hard. It gets punished pretty badly. But then there's lots of structure in here that I would say I'm willing to own the stock and repair it and see this thing bounce back up again. One thing I would say, if we have two gaps, if we have a gap right here and another gap lower, I would imagine that this is going to find some structure somewhere in this area that this stock is going to end up bouncing and doing some gap fills. And I want to be a part of that little journey back to fill those gaps and hopefully flip the stock for maybe, $5, $10, $15 a share, maybe more. So that's my play on Tesla. I'm just sitting in with a credit spread. If it goes up, credit spread becomes profitable. That's pretty simple. If it goes down, I'll use the long put to manage that profit and hedge my position, and then take some shares, hopefully at a better price. Okay. So that's my thoughts on Tesla. Earnings report out. I think it's Wednesday. Let me go into this section here. Where'd my screenshot go? Here it is. So these are the earnings that are notable this week. There's around 400 and some companies reporting this week. Verizon is tomorrow morning, 3M, Raytheon, Lockheed Martin, Freeport McMoran, Philip Morris International, Texas Instruments, Baker Hughes is energy, Seagate's in the tech space a little bit. Boeing on Wednesday. I actually have some dollar cost averaging on Boeing already, so there's not much to do there. AT&T, I still have some shares. Has been a value play. I don't know if I need to. I could do this tomorrow, but AT&T, we're sitting at 21.71. I would certainly like to see a pop to the upside on AT&T. I know we could pull back and maybe find this $20 support, but we've spent a long time in a kind of bear trend and then went sideways and we've based. So even if this is just a big breakout here, any type of dips and pullbacks, I'm still interested in this momentum offering buy opportunities on AT&T. So I would like to personally dump my shares around $24 to $25. I've been holding this thing since the teens. So if I can get, $7, $8 a share, I'm pretty happy with that. I don't need to hold on to this forever. But the ownership I do have, I'd like to see it 24, $25, and then I'll get rid of it. If it pulls back, maybe I'll see what a put costs me. If it's really cheap, I might take this trade tomorrow. That'll be on my to-do list. So that's one. Let's go into some other ones. AT&T, Coca-Cola. If we have any dips on Coca-Cola, I'll probably throw some credit spreads in. If it goes higher, probably not going to touch it. Tesla's going to be the big volatility stock this week after close on Wednesday. IBM, kind of the legacy tech there. Maybe they're dabbling in the AI space and trying to say they're in the AI space. You go IBM, the stock price has been all over the place over the last, 4, 5, 6 years, but just in the space of, hey, we're tech, hey, we're AI, hey, we do things. And since 2023, this stock has done pretty well. So not really interested in doing anything in IBM because it's just sitting here with this rip from the, COVID lows. IBM has really not had the big jump until late 2023, but the stock from COVID lows is up 165%. And just in the last little bit, it's just sitting at all-time highs. So this doesn't want to make me call the top. This makes me want to see what is fair market value. Do we have a chance to, buy a dip or position for a dip? If I look at, let me take a look here on my chart. So IBM Snowflake analysis. Let's see what it says. High level of debt, yes, but pays reliable dividend. Earnings are growing, forecast to grow, trading well below estimated value. So there's still some room in the tank for IBM to go higher. Price to sales, price to earnings, not terribly expensive in the tech space. Valued around 289, so about 19.8% right here. And then peers is 31.9. We're trading at 25.5 price to earnings. So from that standpoint, it has some room. I don't know. I mean, it's near all-time highs. I'm not that interested in trying to guess this thing can go higher. I would rather look to see if we get a, push lower, find a 50. I don't know, find a 50 period, right? I mean, this has been probably ripping off that 21 period the whole year. There's your 21. So once we started to break this momentum, we tested the 21 once, and that is it. So I'd almost like to see it come back and find the 21, see if that's enough to then look at a bull call spread or bull put spread. And then if we want to go to all-time highs, maybe IBM offers that dip. But rather than trading earnings, I'd rather kind of trade this one after earnings and do a spot check on it. Okay, because if it offers a dip or a discount, then I'm more interested in doing something with it. Carvana, I saw your question there earlier, CVNA. Carvana is sitting at 190. When do they have earnings? Is it this week? Nope, it's next week after market. So the 30th, right? October 30th will be next week. Yeah, I don't know. I mean, Carvana, I'm a little pissed I didn't hold the stock since the 20s. I was in here off of COVID lows, and we were down below that for a long time. Once I got into profit, I closed out some, very cheap trades for a little bit of a gain, but I did not hold this position, which is now, in hindsight, a pretty steady head and shoulders pattern that's just broken and just has been on a rip. So I don't know. A dip would be fine. I think a pullback looks good for this momentum. There's a lot of momentum here, and this stock might be, doing pretty well. I think that the tough part is if we start to see, higher delinquencies on cars, if we start to see, interest rates not going lower. I mean, not that Carvana is in this place, but the auction market is what Carvana tries to do. I mean, they essentially are trying to be the Kelly Blue Book of price. And it's had a nice comeback. But if inventory runs high and cars sit stale, I don't know what that does. I mean, you've seen here, even through the last little bit, we've only had 1 out of 6 negative earnings reports. And what's crazy is it still isn't looking to see. I mean, that's ridiculous. They were beating earnings by 946%. Well, I think they need to get some new forecasters because that's terrible. Beat it by 134. So anyway, a dip would be great. Otherwise, I'm not chasing Carvana. You know, the best time to buy it would have been back at the freaking COVID lows. And then you look back and you're like, oh, I should have. But if you did, great. If you didn't, who cares? There's going to be opportunities to hopefully buy dips. And if not, I'll never touch it. But if it offers a discount, then I'll get in. So if we go to Carvana, CVNA, we have forecast to grow, trading well below forecast. So it still has some room to run. Price to earnings, price to sales, not awful. Fair value 278. Let's look at it versus peers. 33.2 price to earnings, peer average 22.3. So it's a little bit on the expensive side when it comes to price to earnings compared to its competitors, which is really interesting. Competitors. I don't know if I would compare O'Reilly Automotive as like a retail store to sell auto parts and compare that with Carvana, who just basically creates vending machines for cars and sells cars, buys cars. Anyway, I don't know, not the same to me. But does the stock have room according to their cash flow and discounted cash model? Yeah, has room to run. But is this something I want to buy right now near the highs? Probably not. I'd love to see a pullback. So 21.50, I'd love to see a pullback. Okay. Chiefer, that's why I spent an hour talking about it, man. I mean, your comment is exactly what I spent an hour talking about, because you get in wanting, the profit without being conscious of the risk. So, I know what I'm willing to risk. And if you're comfortable risking $5,000 a week, then you can make your $1,000 a week. It's that simple. I'm not comfortable for me or clients risking $5,000. So I'm not going to. But you can't tell me that the strategy is not straightforward and not simple and it's easy to repeat. And it'll be steady and systematic with very little stress. But you can look at it how you want to look at it. Okay, what else we have for earnings? Anything else on Thursday, Friday? UPS has been beat up a lot over earnings the last couple of quarters. I'm going to take a look at that one really quickly. So UPS might have a chance to, I don't know, not suck. Let me see. UPS. So dividend not well covered, high level debt, profit margins lower, still forecasted to grow, trading below estimated value. This one might actually offer an opportunity for a credit or for a decent pop to the upside. Price to sales, price to earnings. If people are buying, packages are being delivered, undervalued. Okay. I don't mind taking a stab at some UPS. Let me take a look here. Let's go UPS. Let's see what it costs. We have earnings on Thursday or Friday, which means maybe it's quite binary if I just get the trade in. So it's Thursday before market open. Thursday before market. So we have all day Thursday and Friday managed the trade. Let me see what this is going to cost. So if I go broker platform, UPS, earnings on the 24th, expiration on the 25th. If I buy the 131, sell the 132, it's a 50-50 trade. Not too bad. If I go up by $1, it's 45 cents in the dollar. So a slight edge there. I think I would just take this trade. If I buy the 131 and sell the 132, if I'm right on the trade, great. If UPS has anything positive to come out of this earnings report, then I'll take a stab at it. So we've had a gap lower, turned down a little bit today. So this gap lower, let me see what this news is. Boeing, Canvus, Cigna, Tesla, Spirit Airlines, UPS, Disney, and more. See what they say about UPS, if anything. UPS declined 3%. Analysts at Barclays downgraded shares on the package delivery giant from underweight to equal weight, left their price target unchanged at 120. I see. Do I want to own shares of UPS? Not necessarily. Let's see. Can they beat expectations? That's really the question. 120. I mean, if it came to 120, I would definitely scoop up some UPS. I'll do a 121 chart alarm. Go to the weekly. Coming back into COVID levels, which we may not see. I'm not going to say ever again, but that was clearly some nasty levels. I mean, fundamentally, I think that UPS also just has like a huge pension liability and a union liability, but fundamentally, they're not awful. So they're 22.2 price to earnings, peers 24.4. FedEx is even cheaper at 16.6. I mean, personally, I've had a better experience using UPS offices versus FedEx. But I mean, fundamentally, maybe FedEx is a little bit better. So FDX, let me see what they're at here. FDX. I mean, FDX is nearer to the highs versus UPS. I'm not sure why one is so much better looking than the other as far as the technicals. So I guess for a 50-50 trade, it's not the worst. So here's what I would consider. There's a decent little inefficiency right in here. We also have a price gap on the daily. Let me go to the daily chart here. So if I buy a call, sell a call, and we get a gap fill on earnings, 1.62, 22.10, 1.64. Okay, 1.43. I mean, it's trending the right way. Let me check one more thing before I take this trade. And I'm going to go yahoo.com/finance. I'm going to look at the revenue growth on UPS over the next 3, 5, 10 years. So let's go financials. Actually, analysis, not financials. Revenue. So growth estimates. We're looking at current year, next year, 5 years, 3 years, 5 years. So current year, not great. Next year, I mean, I don't know. It could go lower. I mean, the downgrade certainly doesn't help. So my thoughts are this. If I do a buy call, sell call, and it goes against me, I will probably just do one contract here, 2 contracts here, and take a similar trade. So if I lose $50 a contract here, I can go back and do 2 and make $100 a contract here and walk away profitable. So probably an easy way to do it. And if it actually has a positive print and it fills this gap, then it should be fine to have this thing hopefully hold where it is by Friday. So if I buy the 131, sell the 132, cost me 47 cents to debit that. If I go $1 lower, 55 cents. Yeah, I kind of like this trade here. So I'm going to go buy the 130. We're trading at 131.42. 50 cents. It's 50-50. All right, I'm going to take the trade. I will go 2 contracts here. If I win, I make $100. If I lose, I lose $100. 131 by 132 for UPS. I'm going to take the trade. Filled at 50 cents. Oops. Down here. There it is. Okay. So I'm just going to get these added in. Filled. Filled. Okay, this one not filled yet. This one got filled. Okay. Okay. That one's filled. All right, the trade's in. So let me throw this in my Pulver alert section. This is stocks and options. So here, UPS 10/25 expiration. Buy the 131 call. Sell the 132 call. 50 cents debit. $50 max profit per contract. $50 max risk per contract. Looking for UPS price to stay greater than 132 by end of week. And that trade is in. Okay. So taking a stab at it, getting in here. Price can go up as much as it wants, and if I'm wrong, it goes down, and I'm just risking that little 50 cents. And that's the trade. Screenshot coming, and that alert's getting posted. Okay, little UPS action there. Anything else on the earnings side? UPS, Southwest. Some of these airlines got lifted off pretty nicely. American Airlines, Southwest. I could probably do this more tomorrow as well. Let's check and see how these are looking. So AAL has been up a decent amount. Yeah, this one's already has some decent momentum. I'm not trying to catch this bottom. I got a bunch of puts on this one at $8 that are looking pretty solid. I don't know if the stock's ever going to come there, but when we were at these equal lows, I was in here at the 2020 lows, so the COVID lows, I started putting in some cash secured puts and looking for some decent profit, but probably won't touch that one right now. Southwest has Airlines on Thursday as well. If we have a pullback on Southwest, way more interested in getting some dips. So somewhere in here. If we have a break to the upside, the one airline, I mean, United kind of set the bar where they just crushed it last week. United Airlines, look at this thing. This thing's just freaking ripping from last week. From 61 to 74, that is unusual for an airline to have that type of breakout. So that's a lot of thrust. 24.6% in the last week or so. That's a big move. I don't know if that's going to be sustainable or if it's a bull flag, but yeah, I didn't take the trade. DAL. Delta also creeping up to recent highs. Delta's almost up to all-time highs. And if they get up there, then congratulations. That's good stuff. Otherwise, I mean, I always, if I'm getting into airlines, I like to play them dirt cheap. So those are a little bit on the expensive side, at least technically. Union Pacific, Tractor Supply. Let's have a look at those. Tractor Supply. TSCO. Sitting near all-time highs, not that interested. Union Pacific, the old railroad play from Buffett. A lot of chop in this one. Yeah, I don't know. Pulls back to 220. Ever pulls back to 200. Way more interested at 200. So I'll treat that one like a Boeing. Dividend, not much. Low beta, that's fine, but not that interested. And then Boeing is BA. This one I already have some positions running. We're at 159. I bought this thing at 153 or 152. and I'm trying to buy some more if we have a negative earnings report. But hopefully they'll get their act together and stop giving the market a reason to push it lower. Okay. Any other charts questions? Anything else you want to take a look at today? 10-year versus 2-year is still disinverted, 0.13% above the zero line. Mortgages, sure, this is a sticking. I'm certainly a little upset about this. We got the mortgages pretty sticky at 6.44. They came down to like 6.08 as it headed into the September 18th rate cut. Now they're up about 30 basis points, which is a little annoying. If Fed's going to cut some more, I don't know if that necessarily reflects right away, like 25, 25, 25. If it does, great. If it doesn't, well, then you clearly have the Fed doing one thing, banks doing another, mortgages saying something else, and consumers are left like, what the hell's part of this rate cut cycle when we don't even benefit from it? But we'll see how that plays out. Junk bonds. This is a spread between AAAs, triple Bs, and triple Cs, still looking pretty steady and liquid. So no crazy liquidity crunch or crisis. Want to take a look at some stocks here from China. HSI is down 1.57%. Alibaba is around that 38% pullback level, trading around $100. Baidu, still looking a little. That's disappointing that Baidu can't come clawing back out of this a little bit more promising. But we could have a wedge. Who knows? I'm pretty sure I read last week there was another like $100 billion of a stimulus in China's whatever program they're doing, but it's not enough to just rip the market back around. FXI also trading these areas. See if we get above that by December. KWeb trading at 32. MCHI and JD trading at 39. I rolled this out to November. I have a $42 covered call on JD. If it gets called away, I'll make about $400 or so. I'm in 500 shares of this plus the covered call. So I'm just going to keep aggressively rolling my calls out and down if I need it, or out and up if price goes up. But I'm just trying to turn an income play like I did last week on Walgreens, which was I bought the shares at 8 and change, sold a call at $8, collected a lot of premium for it, and got it called away for about 35 cents a share. So that was a nice little $350 last week. So that's it. If anybody at the top of the hour would like to join me, I am going to be live in a webinar for one of my new programs. So basically, I'm running two things right now on a daily basis. I have the daily profit play every single day where I'm live with traders in the mornings around opening bell, and we jump in and try to grab some profit out of the indexes in the morning. And then this waterfall income trade or weekly windfall trade is something that's really straightforward. You can take the trade with me every Monday. It's very systematic. It's not a stressful trade. It's easy to take. It's easy to manage. There's two ways I will talk about it. I had a hour and 45-minute class today on it. That's turnkey class where I've got a strategy guide, all the videos to go with it. We've got master classes coming up in the next couple of weeks. So anyway, I'm going to be live at 4 p.m. If you'd like to check it out and see what that's all about, I will chat about it. So let me find the link. I'll post that in the chat section here. So 4 p.m. webinar, if interested, there it is. Also on top of that, I've got a 2025 inflation playbook that I'll give you. That's a free PDF download. If you want to come to the webinar, I can post that. That's no worries at all. And yeah, looking forward to seeing everybody in the session. We had a good webinar on Sunday. Great class today, and I've already had a couple weeks actually close out for profit. The holding time on these trades is usually like 11 to 14 days, so it's pretty steady. And I just like to stack up a bunch of winners, and that's that. Okay, thought on Spirit Airlines? Yeah, I don't know, man. I don't know what it's going to take to turn their stock around. To me, this little bullish move on Spirit today is probably just a last ditch effort. I mean, we're not even to earnings season, right? Earnings is Wednesday, and this is what's crazy. It's like the stock makes headlines today, and it's up 58%. Everyone gets all excited, but it's like I'm not chasing that thing. I mean, there could be like little to no volume. There could be little to no. I mean, we're trading at 81 million shares. Like, it's not liquid, but I don't know. Average volume is 9.53 million. I mean, that is a giant leap. I mean, that's 9 times volume today. So I don't know. I mean, I look at it this way. If you think the stock has a chance to be saved, it'll cost you, $2,300 to buy 100 shares and control some options around it, and you can do an income play on Spirit Airlines. My concern is that we're so close to zero that even if I did this as a buy right, let me look at this stock right now. If I did save and I buy the stock right now, let me go long stock. Okay, so if I buy the stock, where's it at? Save. There we go. So if I buy the stock at $2.31 and I put in a call at 250, I mean, here's what I could do. I could take the trade right now for 231. Okay. I could take a covered call on top of that for 19 cents, bring my cost basis down to 212, get it called away at 2.50, make 38 cents if the price stays where it is or goes higher. My concern with what just happened today is that this little squeeze has already jumped, right? So if this thing gets like pumped and dumped during earnings, I'm not that interested buying it right now. And I realize it could go higher, but if it goes from 230 back down to $1.60, I'm stuck holding this turd at $2.12, and I don't really have any way to repair it. Because if I go out a month, let's go to November 1st. If I go out a couple of weeks, well, I get 250. I mean, there's no bid ask at $2. If I go out to the monthly expiration, there's no bid ask at $2. I mean, there's nothing on the options chain right now that would give me any confidence to repair this stock. So I don't know. I don't know. I guess I'll do this. Hypothetically, I'll say this. If I buy shares at 2.31, okay, sell 250 covered call for 19 cents credit. So that gives you a break even of 2.12 shares called away at 2.50. I'm just going to put this on there as a hypothetical to see if it would have worked out. I'm not that interested in taking the trade because if it goes against me, I think it's going to be difficult to repair this thing with limited option fills and probably terrible premium. Of course, if it goes higher, it's like, well, I told you should have got into it. Well, that's a risk you got to take. So I'm not that interested. But that's an easy way to trade it. It's pretty cost effective. You'd own the shares at 212. You can take 1 to 2 to 3 months, and you could work the cost basis down to probably the lows at $1.50. To be honest, I mean, if you give it time, you could essentially own Spirit Airlines for free. Because over maybe 3 to 6 months of doing covered calls and not having it called away, if you chip away at it every month for about 20 cents, do that for 4 months and you're down $1. You own it at 212. Now you own it at $1.12, and there's all but upside, right? It's all upside. So I don't know. It's a trade. Is it my favorite? No. But I want to throw it on the chart just in case. See what happens. If it pushes down, I might look at a bull call spread so there's no assignment and see what that costs me. Let me see what it costs if I do it right now. We have 50-cent spreads here. If I buy the 2 and sell the 250. What? That can't be right. Oh, hang on. So if I buy the 2, sell the 250. I mean, I risk $20 to make $30. You do a couple contracts there. If I want to risk $100, if I risk $100, I make $150. Price has to stay. Well, price has to go up another 20 cents. If I did this in the money, that's not terrible. That might not be a bad play, to be honest. Let me see. $1.50. I mean, nope, never mind. I'm risking $31 to make 20 cents. That's not it. So the math doesn't work. I thought it was a dollar spread for a second, but no, I'm not going to overpay for this one. I want my profit to be bigger than my loss. So yeah, I think I'm just going to sit on the sidelines. But look, the trade is pretty easy. If you're comfortable, like it's dirt cheap, then throw some money at it and see what happens. If it goes up, great. This has like squeeze probably written all over it. But we already popped, 58%. And my concern is that this pops and then this thing dumps and drops during earnings. Because the stock has been, other than dividends, which are also mediocre. I mean, what's the earnings play here? It's negative, right? Negative earnings, low revenue, dividends. I mean, I don't know how this thing is even declaring a 10-cent dividend. So we'll see. So for me, it's hypothetical. I'm not taking the trade. All right, MBLY, sure. MBLY. Mobile Eye Global. I don't have a lot of history on this one. This one starts back in 2022. That's all I got. I mean, it looks like it's on sale, but let me check some fundamentals here. MBLY. What does it do? Deploys advanced driver assistance systems, autonomous. Oh boy. I mean, that's probably an unproven concept. That would have to be. It could be like the speculation of we're going to autonomous vehicles, and what is it, Waymo or Wayf? What is Google's version of autonomous vehicles? Is it Waymo? And then Tesla has their robo taxis and whatever the heck. I mean, is that our new AI race? Is autonomous vehicles? I mean, truthfully, how many of you out there are comfortable saying, "Yep, I got a car that's auto driving. I will buy it and I will drive myself to and from, and I'll never touch the steering wheel. I'll take a nap. I'll never pay attention to the road." It's like that is the weirdest thing. I mean, it's like the amount of money and resources we're spending on autonomous vehicles. Why the hell don't we just put in better public transportation? Why can't we just put in better public transportation? It's embarrassing that we take, trails over rails and we have the crappiest, most rundown public transportation in the world. It seems like it for, being world number one. And we have like the most embarrassing public transportation. So the amount of money companies are willing to spend to get autonomous driving, I don't know. I think you're chasing something that doesn't really have proof of concept. And, anyway, I'm looking at the stock. I'm trying to be pretty objective here, but it's cheap enough. I'm surprised there's not more risks to it. I mean, let me see all the risk checks. So is it liquid and stable? No. And that's it. So it could be worse, but let's see. I mean, that's pretty impressive to see a discounted cash flow model that's forecasting $32 fair value. We go to peer average 1.8 and it's sitting at 5.6. I don't know, man. It's just I don't have a lot of stock history on it, which is what makes me a little bit more nervous about it. And I think it's cheap enough. If you bought it here, there's a nice little gap fill on the technicals that might be able to give you a couple bucks to the upside by about $7. But I don't know. I'm not that comfortable throwing some money at this because I think it could be, lots of potential, but also the reality could be nothing. And I don't like that. So I don't know. But Heather, keep me posted. If you take anything with it, let me know. Tell me that you bought it at 13.18 and you're, making tens of thousands of dollars at 45 and you're like, "See, I told you I called it out on October 21st. You could have taken the trade with me." And I'm the dumb one that passed on it. But I'm going to pass on it for right now. All right. Anything else? Forex wise, we haven't done a lot in Forex. Let me take a look. Dollar index is still pushing through this yellow box. We haven't turned really anything to convince me that we're going down. Dollar index is still something worth of this little melt up. How high does it go? I don't know. Interestingly enough, we're at the 618 from the swing high to low. So does this actually mean the market might turn there? Maybe. Let's keep an eye on that price. If we see something on the smaller time frame confirming, perhaps the dollar turns south. If it doesn't and it just keeps going higher and higher and higher, then yeah, we might do like some type of stop loss run or liquidity grab at these highs and then see if that's a range trade back down to the lows. I'm not sure, but I don't have the confirmation to do anything on the dollar. Let me check on my Swiss pairs. Aussie Swiss still just being patient for right now, generating some carry. CAD Swiss, same thing. Euro Swiss, same thing. Swiss yen, still holding that one short. It's going against me a little bit. I'll scale into that around some highs and pockets. Euro Swiss, hanging in there. Pound Swiss, nothing crazy. New Zealand Swiss, same thing. Dollar Swiss. Actually, Dollar Swiss has been one of my better performing ones because we finally got out of this chop here through September. So dollar Swiss, I've talked about this kind of extensively. If we get up to these highs at 92, I'm taking profit on essentially everything that I have in the dollar Swiss. So from this low to this low to this trend line break to my stacked up orders to this level here, if we add some more, which I'm considering, I'm going to take profit at 92. But I'm not there yet. But patience is the name of the game, and I'll just continue to get some nice little carry swap, positive swap, and see what it adds up to be. If I hold it for the next 3 months, 6 months, year, doesn't matter. It's a 3 to 4% dividend essentially in currencies, which you don't always have, and we'll see how long that lasts until the differences between currency pairs offers negligible swap. But I also think one thing we haven't talked a lot about, since it was kind of all the big news in July and August, was the Japanese yen. So the Japanese yen, dollar yen is still pulling back here. I think it's going to be interesting to see how this high and this low work out. Now, obviously, we made a slightly lower low, but I said that on the dollar. That's a bear trap on the dollar yen, and sure enough, it was. So if we pull back into this level there, you can see past support. You can see past support that broke out. You can see a potential resistance zone right there around 152. If that doesn't turn the corner to the south, then this dollar yen might be in just a range. There's your high, there's your low. If we don't turn here at resistance, then I'd be waiting for something higher with confirmation to then sell. But I do think that this type of move we saw in the yen crosses, that big swing from July to August, I think that is structure that we're going to have to pay attention to, because in the next 6 to 12 months, there's going to be something actionable to trade off of that. So just my opinion on the Forex side. All right. Okay. All right, everybody. I'm gonna pop out of here for today for the final hour. I'm going live here at 4 p.m. If you'd like to join, the link is in the chat, and if you want me to post it again, you're more than welcome to join me. 4 p.m. webinar. I'll be live for my weekly windfall strategy. There's the link again. If you're interested in joining my Telegram, free Telegram, I have the link right here, and then also my free Discord. So this is my Telegram there. And Chris Pulver Trading Discord, which I'm just always having to send out a little reminder that in the Discord channel, if you join me, I do not send friend requests and I do not send direct messages. So if anything like that happens, it's not me. I do unfortunately have to deal with a lot of impersonators out there, and they all do it through the behind the scenes, like, oh, just send direct messages. I clean my Discord channel up every week, and I don't see these members. Like, these aren't members in my channel. This is just coming from like Discord, and it sucks, and it makes me really dislike Discord, but I'm trying to clean it up. The best thing that you can do if you're in my channel and this happens is just use my public channels. Ask me, and I'll say, nope, it's not me. And then you flag, you kick, you ban these users, and we can start kind of smoking them out. So that's the best way to do it. But anyway, Discord channel is right here. So invite. And actually, I think I learned my lesson. The best thing is I need to keep an expiration on these, because it's probably coming in from YouTube. So anyway, there's a 7-day expiration on this invite if you want to join. But like I said, I don't send friend requests and I don't do direct messages. If you initiate and you send me a message personally, that's fine. But if there's an engagement where it's like, oh, Chris messaged me, it's not me. I can promise you. You have to engage first, and then I'll reply. But you know how to find me every single day in my public channels. Okay. All right, everybody. If you want to join me for the weekly windfalls, I'll be live in about 5 minutes. Looking forward to seeing everybody. And yeah, let's continue to grind all week and see what the earnings gives us. Took that trade on UPS today, and we'll see what that ends up yielding. Anything good, anything bad. Boeing, I'm still in. I might look at a couple other earnings plays by the end of the week. I might put in a protective put on AT&T. I might look to see if we've had a dip or pullback on Coca-Cola. So I'll take a look at some of these tomorrow during live market hours. But yeah, UPS, I'm going to put this one in, see if I can highlight this a different color there. So I actually took that trade. Verizon's already up. Boeing, I'm already in. So I'm going to highlight this one green as well, because I've got some exposure on that one. AT&T, where'd that one go? AT&T is, it's in here somewhere, right? Thought we had earnings on AT&T. Maybe I'm sniffing glue. Oh, there it is, right below it. Duh. There. So I need to watch those, because I've got some shares of AT&T, shares of Boeing, Tesla. I guess I have some exposure on that one as well with the credit spread. We'll see what it does. And then UPS took the trade just now. Send Chris a screen to the profile of the scammer. Yeah, please do. If you do have like a direct message, it's not me. Like it's gonna be it's gonna be a misspelling of my name. It's gonna be they joined 2 days ago instead of having my like 2+ year Discord. So anyway, but yeah, I've got a scammer channel that we can help post and keep everybody safe. Cool. All right, everybody. I'm gonna take a little breather. I'll see you at the top of the hour if you want to join me for the weekly windfalls, and looking forward to it. All right. See you soon. Thanks for being here for the final hour. Adios. Bye.